Awesome. um, Hello and welcome everyone to the Zambezi Capital quarterly market update webinar. So this is the actual fourth webinar that we've had, and I know it's a little bit late. Everyone's been busy with the holidays, and as often we have a pretty packed agenda getting these updates out from our diverse panel around the globe and domestic markets, the latest tech and innovation trends, and finally an impact and sustainability update, which is near and dear to our hearts. So before we actually get started, we do have a few disclaimers. So these webinars are, as well as any commentary that's made by anyone, they are for educational purposes and should not be taken as any financial advice. So the information that you'll be hearing is of our opinion, and we encourage you to seek professional advice before making any investment decision. So we at Zambezi Capital are passionate about, things like financial literacy and just like sharing what we know and love dear to our hearts. So this is our way of giving back to the community. So without further ado, I will pass it on to Haggai, who is going to be giving a global economic update. So Haggai is on our investment team, so I'll just pass it on to him to kick us off with the global macroeconomic update. So go ahead, Haggai.
Thank you, Mao. Can you guys hear me?
Yeah, we can hear you perfectly.
Okay. Can you just go to the next slide? Sure. So what we're seeing globally is that the world economy remained resilient in 2013, according to the number that we got, but slowdown going forward remain very slow. Much of the growth that was estimated in last year, which was 2.7 last year, forecast from World Bank and IMF indicates that GDP growth is expected to slow down to 2.2% in 2024 and going into 2025. The sluggish in this growth in the next 2 years is largely anchored on how inflation will go down in most developed countries, but we'll continue to observe these changes in emerging economies as well. There are three things that are critical that we think will be the shapers of growth going forward. One is deglobalization, and the second one is demographics, and the third one is decarbonization. I'll talk about this briefly. But the key thing that we are seeing in these three key areas, which I'm calling the 3Ds, is that they'll continue to impact the global economy going forward. We are seeing a lot of demographic change, especially in developed countries. Labor participation rates are still as stagnant as there are more older people leave workforce and younger people in terms of fertility rates and also demographics in terms of age are decreasing. The other thing also that has to be made important here is that central banks are currently raising rates to bring inflation to the heel. We've seen this in the US, we've seen this in Europe as well, but it seems likely that the cost of doing this will be an economic slowdown and recession in some instances. In fact, the immediate problem that we have right now is that inflation pressures continue to persist at least in the short term. We've seen this in the US. At least US recession remains unlikely, but the growth outlook in other parts of the world is actually not good. In fact, in Europe, UK alone, UK economy this quarter actually fell into recession, and we're seeing similar signs going on in Europe. So the trend around the world, outside Europe, North America, we're seeing slowdown as well in GDP growth in China, and that forecast is said to continue. I'll bet there'll be some other economic cycles around that. If we will go to the next slide. Sure. So this slide is just I talked about briefly about how we are seeing inflation, and we see this is just showing you how inflation has been evolved, global contribution to inflation among different countries, US, China, Europe, the rest of the emerging economies, and the rest of the world. We've seen that 2022 was a peak, 2023. As we go into 2023, inflation start to slow down thanks to central banks' measures around policy hikes that has helped to contain this. But generally, monetary policy in advanced economies is probably at peak restrictiveness, that we would say. But this divergence in economic fortunes is likely to continue, and interest rates will remain actually higher for longer. There are some signs of softening. We've seen the pushback expectation from the US monetary policy, and now actually we think that the Fed will start easing maybe until second quarter of 2024 as policymakers continue to contain the wave of second wave of inflation. For the case of Europe, in terms of interest rates, we are seeing the case of elevated interest rates. It's not really obvious what will happen in that region, but we got early indication from the European Central Bank that they won't be in hurry to start cutting rates until they see some fundamental changes in how the inflation is going. Overall, we think there are three things that investors should look out for as we go forward. One is the timing of interest rates. I think this will also impact capital markets, particularly stocks. I think Mao will talk about this a little more. Second is the political and geopolitical developments happening in Europe and Middle East. We think that will continue also to impact how the growth will continue, particularly with regards to energy prices, which is an important driver when it comes to inflation. And the last one is that's the slowing global growth, including the spillover from China's muted recovery, is also going to dampen the demand for oil and other commodities. So these are three themes that we think will be critical for investors as we go forward. Thank you, Mao.
Interesting. Thank you so much for that update, hi guys. So we've heard what's happening globally, and so locally with our economy. Let's take a look at what's happening with the actual Zambian economy. So I'll pass it on to Wu Pei, who is going to give a macroeconomic update on Zambia. Go ahead, Wu Pei.
Thank you, Mao. As earlier introduced, my name is Wu Pei Mpariri, and I am giving you an update on Zambia's macroeconomic contributors. Kindly change the slide. Great. So the first observation that was noted was that the Composite Purchases Managers Index stood at 49.6 as at the close of Q3, compared to 50.6 in the last quarter. So throughout Q4, the PMI averaged 50.1. The next observation was that the rate of inflation increased to 12.9% in Q4 from 11% in Q3 of 2023. It is also noted that throughout the year, the rate of inflation has been above the target band of 6 to 8%. So if you look at the graph, we've got that little blue area in the middle, that's the target band. And throughout the year, we've been consistently above this target range. The third observation that we noted was that the central bank has been steadily increasing the monetary policy rate over the course of the year 2023 as an attempt to combat the increasing rate of inflation. So as it stands, as of Q4, the MPR was set to 11%, which was an increase by 100 basis points from 10%. Moving on, we noted that Zambia's GDP growth rate stood at 5.1% for Q3 and is projected to average about 5.1 over the year. However, the IMF projected GDP growth to close at 4.1%. Recently, we noted that there was a note about the Mopani investor introducing IRH. So just to go into a bit of detail with that, Zambia recently picked the United Arab Emirates International Resource Holdings, IRH, as the new strategic equity investor in Mopani to take up 51% stake in return for a $1.1 billion capital injection. So IRH's interest in Mopani will be held through its wholly owned subsidiary, Delta Mining. So we anticipate that this could potentially boost the increase of Forex earnings for Zambia, as well as positively contribute to the GDP growth of the country. These were the key highlights in terms of the macro updates for Zambia. Thank you, Mao.
Awesome. Thank you so much, Wupe. So moving on, we're going to be moving on to the global financial market updates, which I will be giving myself. So, a big theme within 2023, and Hi Guys mentioned it, Tafara is also going to mention it, a lot more people were cautious with their spending just because there was a lot of uncertainty with things when it came to things like job security, and also overall things like there was a shutdown, so they couldn't spend as much, and so they had excess savings. So fast forward to the end of 2023 with things relatively back to normal post-pandemic levels. Overall confidence in the market is back, which has led to even a lot more spending. So even though we have high inflation and high interest rates, we do see spending coming back. So the chart you're seeing in front of you is actually the core CPI, which is the Consumer Price Index, which measures what the level of inflation in the US is, right? So, we went from a low of around 2% before 2020, which is what the Federal Reserve, which is basically the central bank in the United States, aims for. It went as high as around 6.5%, or call it 7%, in mid 2022, and then it's come right down to just below 4%. So inflation is improving in the United States. However, 4% versus the 2% that we're used to seeing is still relatively high, but it is definitely reducing, which shows that we are improving. Consumer confidence is improving as well. So what did that actually do to the global markets, right? So when we talk of global markets, we typically look at the S&P 500. So the S&P 500 is the index which basically tracks the best 500 companies in the United States of America. So whenever people talk about investing in the US, the first recommendation is just buy the S&P 500, right? Because that basically just tracks the entire market. So we can see the annual return for the S&P 500 for 2023 was 26.2%. Q4 showed an increase of 10.7%, and the largest gainers were actually the top three industries of information technology, so things like Microsoft, Apple, and all that, communication services, and then also consumer discretionary, right? So we can see that because inflation is going down, that all these sectors are also going up. The worst performing sectors were actually consumer staples, energy, as well as utilities. So a little bit of a balance over there. But overall, if you did invest in the S&P 500, then you would have seen a gain of 26.2%. So if we take a look at the top performing stocks of 2003, so the first one is Coinbase, which is near and dear to my heart. So this is actually a crypto-based stock. It actually performed about 391% gain in 2023. So Coinbase is basically an exchange that trades, crypto like Bitcoin, Ethereum, and all that stuff. And because of the, which I'll talk about later, because of the Bitcoin rise, Coinbase also rose, and so we should see that happening throughout the entire industry. Nvidia was also one of the top performing stocks. So Nvidia is a semiconductor stock, and so they produce all the chips that go into things like gaming, as well as mining and all that stuff. And so that also saw a rise in price. And then we had DraftKings, which is a betting platform, Meta Platforms, which is Facebook, and then Palantir as well. So the top 5 actually performing stocks all performed above 100%. So without further ado, we'll pass it on to Tafara, who will give a precious metals update. So go ahead, Tafara. Are you ready?
Thank you so much for that, Mal. So going into the precious metals update, I do like to start these market updates with a quote. And today's quote is going to be from John Templeton, which is, "The four most dangerous words in investing are 'this time is different.'" And this can be true to the current economic environment that we're in, because we know that history doesn't always repeat itself, but usually it does rhyme. And like Mal mentioned, the exuberance in the consumer is kind of back. You know, we've been spending the whole 2023 talking about the recession, and it hasn't come. The Federal Reserve has been pushing the narrative of, you know, a soft landing or a no landing scenario. But essentially, history can show us that whenever you raise interest rates, something's bound to happen that will impact the economic markets. So today I did want to just start by shedding some light on the prevailing economic conditions that are shaping the market. So to start us off, let's go and address the federal funds rate. So as of January 2024, the federal funds rate is at 5.33%, right? So this rate reflects interest rates that are set by the Federal Reserve, and these rates play a crucial role in guiding the economic policies, as well as they determine how people feel about themselves. So essentially, if you can borrow cheap money, you generally feel richer. And if money is expensive to borrow, you kind of feel a little bit strapped. And then these interest rates are typically cut during recessions to stimulate economic activity. So in Q4, we witnessed a robust GDP growth of 3.3%, which is a significant uptick from the previous quarter's GDP update, which was at 2.6. So this is signaling that, you know, the economy is still in an expansionary environment, and it kind of is undermining the Fed's efforts when it comes to them increasing interest rates. So now let's dive into how this is impacting gold, right? So if we turn our attention to the performance of gold, which is represented by the orange line, and then the performance of the US dollar, which is represented by the blue line, as the historical trend, gold and the dollar have always exhibited an inverse correlation, which means that when the dollar weakens, gold prices tend to rise, right? So right now the dollar is still strong. So gold has seen a rise, but we haven't seen the typical gains in gold that we're used to in recessionary periods, just because that dollar is still strong. So essentially at this point, you would be waiting for that environment to break or something to break in the economy, which would give consumers the sentiment of feeling cautious. It would take away market exuberance, and then that would cause investors to flood into gold and look for alternative assets that would hedge their portfolios. And then if we go ahead and draw any parallels from history, during the 2008 financial crisis, the Fed adopted that low interest rate policy, which was to stimulate the economy and the economic recovery. And then essentially this policy stance contributed to the surge of gold's price. So that's what we're waiting for. We're waiting for the Fed to cut rates, and that will contribute to the soar in gold's price. So if we look at past performance though, in Q4, gold continued to shine brightly, definitely not returns comparable to the ones we all went over, but returns are returns. So a win is a win. In Q4, we did see gold trading above $2,000 per ounce, which was, I believe, a $100 increase from the Q3. Gold did reach all-time highs as well. And so that's important to take note of the fact that gold is continuously in an uptrend. If we look back at 2022 and previous history, there is an uptrend. Now, I always like to highlight potential opportunities in the market. So we can see that the ETFs I like to highlight in Q3, these ETFs were down, and I mentioned that was a good time to buy. So you always want to buy the dips. And in Q4, we did see all the ETFs gain back their gains for the year. So GLD, the ETF, finished at 12.69%. IAUM had a gain of 13.12%. And then the Dixie short didn't fare as well, just because the dollar is still strong. So it was at a 4.89% gain. And then silver, like I mentioned, is more susceptible to economic factors just due to its practicality. So silver did not recover as quickly as gold, and silver finished the year, SLV finished the year at minus 1.9%. So you still have an opportunity to jump in the market there. And that's it for the economic update, Mal.
Awesome. So basically, buy gold.
Always buy gold.
Always buy gold. Okay. That's awesome. So we have the international recommendation. So now we're going to go to the local recommendation. So government securities by Cedric. So go ahead, Cedric, when you're ready.
Hello, good afternoon, everyone. I hope I'm audible.
Yes, you are.
Okay, so we are going to start from bond performance. If you can move to the next slide. So we noticed over the year, there was subdued investor demand in the first half of 2023. And in the second half of 2023, we saw even oversubscription of government bond issuances. And in particular, we saw 1 month in which we had an undersubscription. So if you know that government securities are fixed income assets, and we are currently in an inflationary environment, so the cash flows were affected by the level of inflation, and this made some investors up the amount of money they're investing in these securities to still balance the same cash flow. So this could be tied to the second half participation in government securities, as in the last two halves, we had inflation reaching double digits. And my previous speaker mentioned that it went above the bands. Now, we also had an announcement in the final quarter of the year that beginning of January 2024, government securities will no longer be issued at a discount, but will be issued at par. So just to explain what that simply means, a bond is said to be sold at a discount if the coupon rate stated on the bond is lower than the yield rate. So for example, if a bond has a face value of 1,000 and is issued at a 950, the 50 quarter difference is called the discount. So what this simply means, instead of that 50 quarter difference, each bond was going to be issued at the price of 1,000 kwacha. Now, this was very, very significant. And we note there in the first bar of bond activity that we had subdued investor demand, but still an oversubscription. If we can go to the next slide. All right, now moving on to treasury bills, we are shorter term securities. which are under a year compared to government bonds. We saw greater investor demand in the second half of 2023, much like the government bonds as well, for treasury bills. And we saw the lowest performance of treasury bills recently in February 2024. It could be due to the decision, but we do not have enough data yet because there has only been one issuance of securities. Now, it is also important to note that with government securities, some of the biggest participators on the market for both treasury bills as well as government bonds are local banks. So there was an increasing policy move by the authorities to combat inflation by raising the statutory reserve requirement, which affected how much money banks could actually have available to lend out. So they are some of the biggest players in the bond market. And this was seen by, in the last quarter in November, another increase in the SRR from 11.5% to 14.5%. And we saw just another increase as well, just at the beginning of this year. So high inflation environment continues to dictate how the market continues to move. And we are seeing that as well in terms of the activity on banks. Another important thing as well is the CSD. So the CSD is the Central Securities Depository, which has been was put forward by the government to encourage more individual investors to participate in fixed income securities, both treasury bills as well as government bonds. Now, with this move, the government is actually encouraging individuals to bid directly through that platform. And previously, it would mean they would have to bid through their local commercial bank. So these changes in policy as well have affected the way in which the participation on the market is shifting, because some people are unaware and there will have to be a time for them to catch up with that particular lag. And that's the close of the summary of what's on market. Yeah.
Awesome. No, that's very interesting, and thank you for sharing that. So moving on, we're going to talk about Zambia's capital markets update by Vimbiso. So Vimbiso, if you're up, go ahead.
Thanks, Mo. Hi, everyone.
Yeah.
My name is Vimbiso Simova, and I'll be covering Zambia's capital market update today. And we'll be looking at the Lusaka Stock Exchange. Okay, so we will start with the Lusaka All-Share Index. And from the graph, we can see that the market closed out the year strongly with a 15.8% increase for the Lusaka All-Share Index in quarter four, continuing on from quarter three's 13% growth. This came despite tougher market conditions as both interest and inflation rates rose, while the kwacha depreciated heavily. The final quarter growth pushed up the overall return for the year to 47.4%, which was higher than most exchanges in the region. As for the top gainers this quarter, Zambia Sugar came first as the stock rose 94.6%. They reported revenues increasing 14%, driven by higher selling prices and export sales. Real estate investment Zambia increased 16.1%, while butter increased 15.4%. If I could just have the next slide. There have been some recent noteworthy developments in the mining sector. Cobalt Metals, a California-based company backed by Bill Gates and Jeff Bezos, have discovered a significant copper deposit in Zambia, known as the Mingoma Project, through the use of AI. It is expected to rival the Kamoa-Kakula complex in capacity, which last year produced 400,000 metric tons of copper. Copper production worldwide is also expected to increase to meet the increasing demand for ammunition, components of electric vehicles, and digital products. And because of this, the price of copper is expected to rise to $9,500 per metric ton from its current price, just above $8,000. There's also a growing concern for sustainability in the mining sector with reference to the use of renewable energy in production. And this will be covered further in more detail by Daniel in the impact and sustainability update. And can I have the last slide, please? Okay, so going forward, there are a few stocks to keep an eye on. Zambia's first green bond was issued by CEC, Copperbelt Energy Company Renewables, a subsidiary of CECZ, and are raising $200 million for investment in development and production of renewable energy in the operating Riverside and nearly constructed Timpi solar plants. Production should begin to increase in the second half of the year, following the finalized construction of the Timpi plant in Kitwe. ZCCM will also be an exciting stock, following the Arab Investors International Resource Holdings $1.1 billion investment in the Mopani mine. And this will see increased copper production in the near future to meet the increasing global demand. The increased foreign exchange inflows thereafter will improve liquidity and stabilize the currency, which could drive further growth for the market. And lastly, we have Zambeef, who announced a $100 million investment in the Mpongwe farms, with plans to more than double their grain production, and particularly wheat, to 150,000 tons per annum. Although this announcement was made in 2022, we are yet to see the full effects of this investment. So Zambeef is definitely one to watch for the remainder of the year. Thanks for listening.
Awesome. Thank you so much. Moving on, we have a venture capital update by Haggai. So go ahead, Haggai, when you have a chance.
Sure. Thank you so much, Mao. Can we move to the next slide? Yeah, so venture capital is one of the interesting asset classes which has been emerging, especially growing so massively in Africa, and there's been interesting activities especially in the last 2 years. But 2023 was a rough year for the African VC ecosystem and tech ecosystem also generally. There was a decrease in transactions across different type of countries and regions. And this was much attributed to what was going on within the global economy, given the slowdown in massive liquidity that we had experienced in 2022 following COVID. In 2021, there was a pullback from most of the investors. And as you know, most of the investors investing in VC, or at least institutional investors deploying capital in Africa, most of them are based in North America and Europe. And so we saw a pullback in amount of capital being deployed in Africa. And we see that this happened across all stages, from seed to Series A, Series B, Series D, and across all countries. In fact, half of the investors disappeared from the market last year, and there was less activity generally. In fact, for startups and businesses that were present within the market, they focused more actually in preserving their liquidity rather than growth. So not so much fundraising was going on last year. And if you see on the screen, this is just a snapshot of what deals and volumes were as compared to last year. So we had pretty much negative growth in actually all the key aspects of the metrics. Equity funding was down by 54%. Deals were down by 32%. Investors who are deploying capital were also down by just 50%. Debt funding was only down by 23%. I have to mention here, it's interestingly that most of the VC investing in Africa has been, from the debt side of things, has been resilient. We're seeing more private debt or private credit being deployed, more than venture funding or venture financing, which is venture equity. And this is interesting, especially within the tech ecosystem, where we're seeing a lot of deals happening. And the other trend that we've seen here, and actually 3 things that we have to conclude here, is that this picture is not only in Africa, by the way. The decline in VC funding was generally across the board. We saw this in other markets, especially other emerging markets. In fact, Latin America and Southeast Asia experienced even larger scale in terms of decrease in VC funding. Despite this downturn, we're seeing certain current levels of funding still present significant, and the growth over the past 5 years nearly doubled. So even though there was a pullback last year, there's still a significant amount of capital being deployed, and we continue to see VC growing post 2024. Can we move to the next slide? Okay, sure. So this is just a snapshot of what the numbers looks like. Pretty much small. I don't know if you're able to see, but the big four remain the darlings of VC. And when I talk about the big four, I mean big countries where most of VC in Africa is actually going to. And this is South Africa, Egypt, Nigeria, and Kenya. Even in the slowdown of VC last year, these countries massively received tremendous amount of capital as compared to other countries. Zambia continues to be improving in terms of the tech ecosystem, generally the VC ecosystem. We are seeing quite a number of deals happening, not as frequent or as massive as we see in these big four countries. Just to kind of highlight a few deals that happened last year, and some of them which happened this quarter. Actually, Lupia actually received 8.5 million last year. That was their Series A funding. And by the way, Series A is just the round of funding which comes immediately after seed. Good Nature Agro received about 8.5 million in Series B. Good Nature Agro has been quite very busy in this space. I've raised quite amount of rounds. Then we also saw a venture capital firm being launched, or fund being launched. Monte Capital Partnership Limited closed their Fund 1 at $40 million. The basis of the fund will be just investing primarily in markets in sub-Saharan Africa with a focus on financial services, clean energy, and agribusiness. And just recently, last month, we saw Bosso, which is a startup within housing, receiving also capital from Renew Capital. I guess that was seed, but it was undisclosed in terms of the amount. So these are some of the activities that we've been seeing. There's a lot more going on, and I think it's a great space, especially for startups now, and we'll continue to see growth going forward. Thank you, Mao.
Thank you so much, Hagai, for that update. We are now going to pass it on to the technology and innovation update that's going to be given by Fadami. So Fadami, whenever you're ready, go ahead.
All right, thanks, Mao. Can you hear me clearly?
Yeah, clearly.
All right, okay. All right, so last year, the Africa FinTech Summit was held in Lusaka for the first time. It saw over 625 delegates from 45 countries around the world. This brought in government agencies, fintech startups, banks, and VCs. So the Africa FinTech Summit basically aims to bring in industry leaders from technology, policymakers as well, to address trends and any issues that may arise. So I attended the summit with the rest of with a few of Zambezi Capital's team members. We were actually participating in shameless plug. We were showcasing our application, Quick Cash. And during this event, there was a pitch competition that had a prize money of $2,500 as well as network support. And this was won by another Zambian company called Save and Remit. Yeah. So it was a great event. It was graced by the Minister of Science and Technology as well, who had a very interesting pronouncement. He did say that Zambia has secured a transaction, and by June this year, they should be starting to implement a smartphone manufacturing plant right here in Zambia. So not much information on that at the moment. So I'm sure in the next update, we'll have a on that and how that's going. So we do expect to see a price drop in smartphones around Zambia, and this will work for financial inclusion. Now a lot more people will be able to obtain smartphones and participate in a lot of financial transactions. So we can head over to the next slide, Mo. Yeah, all right, okay, awesome. All right, so Bolt, a ride-hailing company launched in Zambia. This marks only the second country that it's active in sub-Saharan Africa. And they are going against Yango, who's already been established, who came in, I think, a few years ago. So Bolt is just as large as Yango. They have an $8 billion evaluation. Yango has a $12 billion evaluation. At the moment, Yango claims the most market share, previously held by Orlando. But Yango came in with a very aggressive go-to-market strategy and a budget. So let me tell you a bit on how it worked, because I think it was very interesting on the way they grabbed majority of the share. So they offered drivers huge incentives. For example, 1,000 kwacha when you complete a certain amount of rides, and this was going on for I think 3 to 6 months. So rumor had it that they had spent over $1 million on these campaigns. So drivers and customers who also were given 80% discount on rides came in, flocked over to Yango as well. So I'm assuming Bolt, who also has a huge cash reserves, will probably come in with the same aggressive marketing strategy. And I think competition is great. So it will be great to see how those two compete and go against each other. And just to add on, so much of the market share was grabbed by Yango that was previously held by Orlando, that Orlando pretty much had to rebrand and sell their business to an undisclosed buyer. So we are yet to see more on that. And that's about it on the boat launch in Zambia. Can I head over to the next slide, Mo? All right. So just to add on to, I think it was my colleague Cedric who mentioned the launch of a government securities platform. And I think they deserve a round of applause for it because it's been long overdue. I think creating the digital platform would definitely attract a lot of retail investors. So a few things you need to complete your profile, your photo, details about yourself, an image of your signature. You should have a taxpayer number registered and an active bank account. It takes around a day or so to have your profile verified and for you to be able to start purchasing any government securities that are available. I won't go too much into the technicalities. That's not my specific area of expertise. So I would just give a bit of feedback on the use of the platform. It is very simple to use, but I feel like it could have had a bit more information on resources. For example, a frequently asked question section that just helps onboard the user on how they should use the platform. But otherwise, I give it an 8.5 out of 10 if I was going to give it a review. And yeah, looking forward to see how many people will be accessing this platform as well. So we can head over to the next slide, Mal. All right, so last year, after ongoing conversations in Parliament, Zambia implemented a tax on mobile money at the beginning of this year. So this mobile money tax ranges from 18 ngwe to around 1 kwacha, depending on the transaction and amount. While this doesn't seem like much, you have to take note that the volume of mobile money transactions for 2023 stood at 2.2 billion. And this was totaling to around 450 billion worth of money being transacted. So while the amount is tiny itself, I think it does add up to quite a lot. The public wasn't too happy. Sentiments were a bit down because they interpreted this as the rising cost of mobile money transactions, and considering the the wide growth, the recent growth that's been going on in mobile money, people assume this will definitely hinder its growth, on its ongoing growth in the time to come. We'll wait and see how that goes. Then we do have the last, but the most sci-fi news, actually, if you ask me. Elon Musk launched a Neuralink implant. Oh, Elon Musk had their first Neuralink implant in a human. And personally, I can't wait to see how this goes. So their first product that they're working on is called telepathy. So Neuralink is basically a brain computer human interface. So it's supposed to help people control actions of a computer by simply transmitting their thoughts from the chip that's been implanted. So it's a small electronic chip that detects brain signals and then transmits this wirelessly to an application within the computer. So I'm assuming there'll be a huge amount of real-world applications that this will have. There's not much information on this yet, still being kept secret, but there have been a few trials that they did have on animals, and they claim they yielded positive results. So this implementation, this implant on a human was mostly just to test out the safety of the process. So I'm sure we'll have a lot more information. And that pretty much sums up the tech and innovation update. Thanks, Todd.
Awesome. Thank you, Fad. And I'm sure like I, as well as a lot of people, have a lot of questions around the whole Neuralink thing, for sure. Just because it sounds so futuristic and everything like that, but we'll get to that. We'll get to that later, right? So next up is the digital assets update, which I will be giving. So with regards to digital assets, focusing on Bitcoin. So let's just talk about the Bitcoin market performance so far. So the annual return for Bitcoin in 2023 was 153%, which is, phenomenal compared to a lot of assets. So, Q1, Q2 saw a lot of good returns. Q3 saw like a negative return of 11.7%, and then Q4 saw 56.5%. And so the stats around Bitcoin it's around 830 billion total market cap in US dollars. And I know that number might seem a lot. However, that's still tiny compared to, other big assets. But for an asset that was launched in, 2009, that is pretty big, right? But however, what the two stats that I like to look at is the current supply and the liquid supply. So the current supply of Bitcoin is 96 million coins. So 19.6 million coins, sorry about that, 19.6 million coins out of a total of 21 million. So the total supply of Bitcoin is only going to be 21 million coins. And right now we have 19.6 million coins actually mined out, right? And we have a liquid supply of 3.2 million coins that are actually available for buying and selling, right? So those are the stats that I usually look at when it comes to Bitcoin, and to see where it actually is going to go up or down in value. So I look at the current supply as well as the liquid supply. And so some events to watch are, first of all, the SEC has approved 11 Bitcoin ETFs. So what does this actually mean? And I'm actually going to go back a slide to explain to you, right? So there are currently 3.2 million Bitcoins available for trading out of a total 19.6 million, which means that around 17 million Bitcoins are held in private wallets, which means people who have bought Bitcoin and are just they're just basically holding on to them because they don't want to sell them. And so that limits the liquid supply of Bitcoin. But now we have actual ETFs, which are exchange traded funds, approved to actually hold this asset. And so we have, funds like BlackRock, ARK, Fidelity, and all that stuff with like billions and trillions of dollars ready to like put into this asset. But there's such a small supply available to trade. And so that's like one of my thesis to how Bitcoin's actually going to perform over the next few years, right? So that's one of them. The next thing is like because Bitcoin ETFs have been approved, there is a lot of speculation of other cryptocurrencies that will be approved for an ETF holding. So the next biggest one is Ethereum, ETH. So this is the next biggest cryptocurrency. It's the most active cryptocurrency, and it's also the most likely cryptocurrency to be held as an ETF. So that's something to look out for. When it comes to fundamentals, we do have an upcoming halving event, right? So the halving event is basically happening in April 2024. And we just call it the halving, but it's basically when the actual block reward for each block cuts in half. So usually a lot of miners go for they try to set up their operations to mine Bitcoin, and so each block, which comes out every 10 minutes, spits out 6.25 Bitcoin. And so the miners get that, and then they sell it onto the exchanges to actually get money. However, that supply is actually cutting in half, which is scheduled every 4 years. So it started with 50 and then went to 25 and so on and so forth, right? So we're now at 6.25. It will cut in half it will cut in half to 3.125 BTC in April. And so usually what happens then is as demand increases for Bitcoin, which we have seen now that the ETFs have been approved and, we have all these institutions wanting Bitcoin, we should see a price spike within Bitcoin over the next year and a half. So that's something to look out for. And then another mover is the Federal Reserve. So, as mentioned before, if interest rates drop, this will drive the overall crypto market up, not just Bitcoin. So Bitcoin, Ethereum, and all the other coins, as well as all the other tech markets and all that stuff. So that should also drive the overall markets up. So that's what's pretty exciting about this space right now. And so it's just giving us a little bit nostalgia because we started talking about this in Q1, and just seeing the total annual return of 155% is pretty great. But of course, not financial advice. Do your own research and look into what you can actually risk. So without further ado, I will pass it on to Daniel, who will give us an impact and sustainability update. Go ahead, Daniel.
Thanks, Mal. So I think the impact and sustainability update is interesting and really comes to heart when we talk about it. And I think we're at the point where today we have a great number of individuals, governments, international organizations, and private companies who are trying to prepare the world to a green economy, right? So basically what we mean is that how do we produce in the most sustainable way? How do we care for our citizens, our employees, and various stakeholders? So this transformation is as a result of also addressing climate change, social and economic challenges in overall, and including some aspects of governance within economies or countries, within corporations, very, very important when it comes to what we do and where we want to position ourselves within the market, is understanding the basis of why this is happening. And for example, this transformation will actually involve all sectors, and the big one is the energy sector, which we had highlighted last quarter. And this is quite important because the energy sector will drive the adoption simultaneously with the financial sector, of course. So because those investments, if they're driven in a sustainable way, obviously that would help us achieve our goals. So talking about even manufacturing, agriculture sector, those aspects have to also be considered. So we are studying this on a quarterly basis, and it's a new space as well. So we're not experts in this. I think I want to establish that. So we're just learning and navigating the whole environment and development. Most of these sectors actually will almost certainly require copper in the digital economy. Digitizing the world economy means first investing in the mining sector, specifically in copper. For that mobile phone that you have, for the electric vehicle that we all fancy to own sometime, and our computers that are enabling us to even host this webinar and connect with various people across the world. So if we look at the energy distribution in Zambia, most of our energy comes from the hydro, which is like 8.45%. Then 10% is coal. So if we think around that, we know there are not so many places we can mine copper in the most green way possible. So the mission is producing that copper in the lowest carbon footprint. So, and we believe that Congo, Zambia have a huge comparative advantage in that space, even compared to Chile. So coal, on the other hand, has largely caused a huge amount of global emissions that have resulted into global warming concerns across the world. So we could possibly have a mission to see how we can sustain the whole electric sector around that. So what's the point if we have to mine copper, right? And the meat at the same time, also using it to push the green agenda. So now the hope is within the market. What do we mean by that? So I'll spend a few times on this slide because it's quite interesting around how we believe this should unfold. So say a market, I know Singapore is working on this, where the price differentials in terms of that production process or the supplier. We expect the greener the copper, the higher the premium, and the dirtier the copper was produced, the larger the discount. So price differentials are also will be based on this emission production per unit of copper produced or per unit of gold produced. So it really makes sense that this would sort of come into implementation, and Singapore taking the forefront role in terms of how this is going to unfold is quite exciting, and we'll still keep on investigating how we can also tap into these markets. So if we look at the performance of Tesla, which is like the biggest in the market of the electrical vehicle, the stock price dropped significantly during the period, and but we had really good performance within the first quarter of last year. And if we look at the deliveries, we have 1.8 million deliveries in 2023 compared to last year. I think we're doing fairly well in terms of EV sales, and this is rising according to even the Bloomberg chart, as you can see. Then we expect this EV sales and production to really grow. First, if we can't fully go electric, we can create hybrids, and we expect an increase of 21% in 2024. So this is approximately 16.7 million, with 70% of those who are going to be fully electric in terms of the market share. So something that came up recently is the reforms around the financial sector and implementing or influencing the consideration of ESG. So during the National Symposium in Zambia, during the Economic Performance and Budget Economic Outlook, Bank of Zambia governor highlighted the need of implementing ESG within the Zambian financial sector. And we also believe, like I mentioned, is that the financial sector, in conjunction with the energy sector, will really drive how fast this whole ESG revolution unfolds. So it will also bring about the aspect of green jobs. So according to the World Economic Forum, the global green transition is expected to generate over 30 million jobs by 2030. And this will be driven by the demand for renewable infrastructure and ESG, hence the need to prepare or upskill for the energy transition. So to adapt to climate change. So think of jobs like ESG auditors. I think that could be a huge demand in a few years. Then, and this is just unfolding quite faster than we thought. Then also sustainability analysts, ESG analysts, energy systems specialists, developers, and around this whole space who understand how this can really be achieved will be at the position of tapping into these job opportunities. So that's all we had for our impact and sustainability update. Back to you, Mo.
Awesome. Thank you so much. So next up, we have our Agri sector update, which I think this is the first time we're having it. So go ahead, Mlangeni. I see you're unmuted, but I can't hear you. If anyone else can hear them. Okay, because we can't hear you, just message me separately. We'll move on to the next update, which is I believe the health sector update. Sorry, the investor sentiment update by Mainga.
All right, thank you, Mao. Yeah. So the investor sentiment and geopolitics update aims to just scratch over world events and see what's happening and how we are affected. Next slide, please. Next slide. Okay. Yeah. So we'll start over with some news highlights with regards to the Russia-Ukraine war. The recent news highlight can be that the US Senate advanced the $95 billion aid package for Ukraine amid ongoing tensions. Ukraine accuses Russia of using Starlink terminals for military purposes, denied by Starlink. IMF warns Russia faces very tough times despite GDP rebound. Now, with all the conflict that's been going on in Russia and Ukraine, maybe our question would be, what does this mean for the globe and in Zambia in particular? And for us at Zambezi, we can maybe conclude that the the continued persistence of the war has continued to affect commodity prices, particularly in the energy and agricultural products. That has had an impact on or disruption in the overall supply. And adding to this, how then are investors reacting towards this global event or news that is happening? And I think investor reaction can be that because of the volatility in the global markets due to the geopolitical tension in stocks, companies with exposure in East Europe may continue to see a decline with the continued war. So then, with this continued war, how then has that affected the markets negatively? And this can be that the negative aspect of it is that we seem to see a rise in defense and cybersecurity stocks, and mainly because of investor uncertainty, which makes them fly to safety. So while it may be seen as a positive for others, generally on the global scale, it's a negative. And maybe a positive direction that can come as a result of this is that we are of the view that renewable energy investments may gain favor as geopolitical tensions, seeing that there's a risk associated with fossil fuels. And also, another positive that can come out of this is that companies with strong ESG practices may also attract investors seeking stability amid geopolitical uncertainty. So we move on to the next conflict, which is the Israel-Palestine conflict. And in the recent news, we saw that Israel launched airstrikes in Rafah, causing civilian casualties and humanitarian crisis. And in the same fashion, overall, what does this mean to the world at large and Zambia in particular? I think we continue to see an increased volatility in the global energy market due to the regional instability, owing to the fact that Middle East is a major oil producing region. As a result, escalating conflict would continue to impact oil prices. And also, as a result of this conflict, we're able to see that investors may adopt a cautious stance to escalating violence and humanitarian crisis. And stocks in companies that possess a direct relationship with the conflict may tend to decline. A positive direction that we can see from this conflict is that we believe that investments in conflict resolution and peace building initiatives may attract attention, and companies promoting social responsibility and humanitarian rights may be favored by investors seeking stability in the region. The last conflict that we will look at is the China-Taiwan conflict. And the recent news highlight is that Taiwan elects the DPP candidate, causing tension in China. Market response remains relatively stable despite geopolitical tension. Looking at the China-Taiwan conflict, I like to look at it as a conflict of semiconductors, the semiconductor market, I mean. And knowing how much we know about the conflict, maybe the next question can be, how does this impact the globe and Zambia in particular? I think over the years we've continued to see China's interest in Taiwan and the Taiwan Semiconductor Manufacturing Company in particular. Its advanced chip manufacturing capabilities are crucial for various technologies, including smartphones, computers, and other electronic devices. But I think for Zambia, we need to closely monitor developments in the China-Taiwan relationship to mitigate potential economic repercussions. And I think overall for investors, we are of the belief that investors may exhibit cautious optimism, considering stability of Taiwanese cooperation. And because of this, sectors tied to Taiwan may see increased sensitivity. I think a negative that can come from it is that technology and manufacturing sectors may face challenges with the continued friction. So the challenges may spill over again to the globe because Taiwan is the largest mover of semiconductors. A positive to this can be that investments in diplomacy and conflict resolution efforts may gain traction. Companies promoting regional stability and cooperation may attract investor interest. Next slide, please. Next slide. So with the update, these are a few of the highlights that we as Zambezi think with regards to this segment. As geopolitical tensions rise, investors are likely to seek refuge in safe haven assets such as gold and Bitcoin. The second is a cautious stance may be adopted by investors amid escalating violence and humanitarian crisis. The third is stocks in the Middle East companies could face declines due to heightened tensions, while investments in renewable energy may gain favor over fossil fuels. Another one is that companies with robust ESG practices may attract investors seeking stability amidst global geopolitical uncertainty. Volatility may be experienced by Taiwanese companies, and regional instability could disrupt supply chains, influencing investor decisions. And lastly, investments in diplomacy and conflict resolution efforts may gain traction amidst escalating conflict, while companies promoting regional stability and cooperation may attract investor interest. Thank you very much.
Awesome. Thank you so much for that update. So we're actually going to backtrack and actually get a health sector update by Callie. So go ahead, Callie.
Good afternoon, everyone. So my name's Kali Maliti. I'm consultant for social welfare, and I'll be giving the updates for the health sector. And just to begin, next slide, please. The World Bank, IFC, made a significant investment of 50 million in Leapfrog Investments, Emerging Consumer Fund 4, to address infrastructure gaps and promote sustainable development in Africa and South Asia and Southeast Asia. Now, this investment aims to support fast-growing health and financial service businesses in Africa, South Asia, and Southeast Asia. This also addresses critical access to growth capital for job creation and improving essential services. And also looking at the challenges in the health sector. Asia and Africa both face challenges such as affordability barriers, infrastructure limitations, shortage of healthcare staff, limited availability of diagnostic tests, distribution challenges, inadequate education, awareness, and motivational support. And also not forgetting limited enabling technology, which hinders access to quality healthcare. Now, the investment from World Bank seeks to address these challenges by supporting innovative solutions and enhancing access to quality health services. One of the examples I can give is, of course, a project which I'm currently working on as the district coordinator called 1000 Days in Social Cash Transfer, which looks at gender and nutrition aspect of a child below the age of 2. So we're looking at how to help enhance access to quality health services and also innovative solutions. Health Inventors Lens will look at how patients are increasingly getting involved in healthcare decisions. This trend necessitates a holistic and proactive approach to treatment. Now, the health expertise combined with patient involvement and supported by new technologies such as artificial intelligence can empower both patients and doctors to better manage conditions and improve clinical outcomes. Next slide, please. We'll look at the Zambia's cholera cases as an update. So according to Ministry of Health, as of February 15, 2024, Zambia has reported a total of 18,052 cumulative cholera cases since October 2023. Now, of these cases, 18,052 or 95% of patients have been discharged. Now, unfortunately, there have been 268 fatalities reported. These cases are primarily concentrated in Lusaka, Central, and part of Eastern regions where I am at the moment. Also, we look to address the gaps and opportunities for Zambian health entrepreneurs. So the cholera outbreak in Zambia undergoes the urgent need for innovative solutions to address challenges such as inadequate infrastructures, limited healthcare staff, and poor access to diagnostic tests. Now, health entrepreneurs in Zambia can fill these gaps by developing solutions that provide innovative healthcare services to vulnerable communities. Of course, the cholera outbreak is one example that we can all agree to say is usually very not prepared for. So we are looking at patients, being tended to in a stadium. I mean, we need to prepare better for that, I think. So that is it for my presentation. Thank you so much, Mao.
Awesome. Thank you so much for that update. Very, very insightful. So before we go to our Q&A section, I'll actually pass it back to Mlangeni, who's going to give us an agri sector update. So go ahead.
Thanks, Mo. Is everyone able to hear me now?
Yeah, we can hear you perfectly.
Great. So, hi everyone. My name is Mlangeni Chika. I'll just give the agri sector update. I'll start with the incentive programs which are currently available in the sector. So recently, government launched the agriculture credit window as a sustainable financing facility. Essentially, the credit window is meant to address the problem of lack of production and productivity in the agriculture sector, as well as to address the issue of the affordability in terms of financing in the sector. So the credit window essentially gives out loans to small and medium-scale farmers who are not on the FISIP program. The loans are given out in the form of agriculture inputs, and several people are eligible to benefit from such programs, including civil servants and salaried employees. They range from approximately 13,000 to 70,000 kwacha, and so far 5 banks have supported the program, which include Atlas Mara, Zanaco, Indo-Zambia Bank, NatSave, as well as APSA. There are similar incentive programs in the agriculture sector besides the agriculture credit window. We've seen in the 2024 budget, there's 150 million allocation for the public service microfinance company for the agriculture asset plus loans program. So essentially it gives affordable loans to civil servants for purposes of agriculture. And they're usually using a similar model whereby the financing is in the form of fertilizer. Other solutions which are available in terms of affordable financing and incentive programs include the Zambia Credit Guarantee Scheme, amongst others. I'll speak a little bit to external financing. Currently, we have the Zambia Growth Opportunities Program, or the Zambia Growth Program. I think that's one of the biggest externally financed agriculture projects which we have in the country right now. ZamGrow is a $300 million financing facility from the World Bank. It's due to end in 2026. It commenced around 2023 through concessional financing from the World Bank. So currently, for the local market in Zambia, most of the external financing received are from multilateral partners. It's concessional in nature, meaning low interest rates over a longer tenure. And this is partly because we're on the IMF program. So there are certain constraints in terms of borrowing or net external financing, which we can accommodate. But with regards to the private sector, there's a lot of activities happening in terms of financing the sector, but they're mostly being dealt with from the policy side. So there's a passing of the Public Debt Management Act, which happened in 2022. The aim is to submit annual borrowing plans. And these plans give essentially the platform for financing, but also the long term, aim to bring debt back to sustainable levels. So over a period of time in the coming years, we're likely to see a gradual reduction in domestic and external financing from securities as a proportion of GDP in order to avoid crowding out of the market of the private sector and to make borrowing more affordable for the small scale commercial lenders. In terms of entrepreneurial farmers, there are lots of programs which are currently available for young women in Zambia, especially those partaking in agribusiness. Some of the popular programs are the Standard Chartered Bank Women in Tech program, which is being executed by Bongo Hive. It's one of the best incubators in Africa. There's also the Academy for Women Entrepreneurship, the AWE program. It's being financed by the US government and implemented by WeCreate. So there's a lot of literature out there to support the fact that women's participation in agribusiness actually boosts agriculture production and productivity. And what we're seeing is that a lot of the financing facilities available are often seen through a gender lens. So there's that cross-cutting aspect to either grant financing or loan financing, which is embedded in the concept notes. With regards to government focus, so essentially a lot of it is executed based on the national development plans. So currently there's the 8th National Development Plan running, and the agriculture sector has been identified as one of the key drivers of economic growth in the 8th NDP. And this is actually backed by the statistics on the ground, where it shows that the sector employs the highest number of people in the country. We've got over 2 million people who are employed in some form or another in the agriculture sector, be it in terms of processing or in terms of labor. Now, with regards to the same particular government focus, there's been reforms in the sector. I'm sure you're all aware that there's the Farmer Input Support Program, or the FISIP program, which is currently running and benefits approximately 1 million people. However, there's been a reform in this program where it's shifted to the Comprehensive Agriculture Transformation Support Program, or CATS. And the aim of the program is to look at system strengthening, and not just from the perspective of providing inputs to farmers, but also considering other aspects such as extension officers and the recruitment. We saw recruitment of 500 extension officers in the 2023 budget, or an allocation for them. It also looked at access to finance, and we've seen this through the agriculture credit window, as well as the facility through the public service microfinance, which I earlier mentioned. The support in terms of value addition, storage and logistics, amongst others. There's also development of farm blocks, such as Natanga farm block, which there is hope that it will boost agriculture production as well as productivity. Finally, some of the assumptions for 2023 and 2024. There may be some variability in terms of rainfall patterns, and we are currently seeing this in the country. However, what I would advise is for all farmers to closely follow the updates which are delivered by the Ministry of Green Economy and Environment to provide them with how the seasonal rainfall variabilities will fare. And I think that concludes the update.
Thank you so much for that update. That was very interesting, and definitely loved the fact that we have different programs that are empowering young women in Zambia within the agricultural business. So that was very awesome. So on behalf of Zambezi Capital, I'd like to thank everyone who joined in. Of course, this is being recorded and will be posted on social media. And again, we are a team that is very passionate about financial literacy and teaching this to the different audiences and parties. So we do thank you for tuning in. And we also want to thank our guests for presenting. And so without further ado, have a great evening / afternoon / morning, wherever you are in the world. And we'll see you for the next webinar. Thank you.